Hey there. As a business owner, you know all too well the impact COVID-19 had on the economy and businesses like yours. You probably also know about the PPP or Paycheck Protection Program loans the government issued to thousands of businesses to help. But what most business owners don't know is that the government also created special credits. Think sizable checks sent directly to you, the employer, to help businesses affected by the COVID-19 pandemic. They're called Ertc, or Employee Retention Tax Credits. And in this video, you're going to learn how you can check to see if you qualify for them. And just a little hint, way more businesses qualify with the new changes that just went into effect than ever before. And you also learn how to calculate how much you're entitled to, as well as some common myths about the ERTCs that cost a lot of business owners a lot of money. And toward the end of the video, I'll also tell you where you can get even more free customized help to make sure you qualify, maximize your credit, and complete the forms to get you a check in the mail from the IRS as quickly as possible. But first, what is the ERTC and how did it come about? In short, it's a fully refundable credit against the employer's portion of the Social Security tax paid to employees. If you're eligible, you can receive as much as $28,000 per employee in the form of a check sent directly to you. And the ERTC was created by Congress through the CARES Act back in March of 2020 to help businesses navigate through COVID. But here's where things head south real quick. It's been modified and amended 8 times. That's right, 8 times since its inception. And 3 acts have been combined into one along the way as well. So as you might imagine, this has created an enormous amount of confusion and misinformation that's costing business owners tens or even hundreds of thousands of dollars in credits that they're rightfully entitled to, but they aren't claiming. Here are just a couple examples of what I mean. Myth 1. If you've taken the PPP, you're not eligible for ERTC. This is just false. It's true that when the ERTC started, companies had taken the PPP that had taken it didn't qualify for ERTC, but not any longer. And thanks to some legislation back in December of 2020, the doors have now been opened to those who claimed the PPP loans back in 2020. So now businesses can apply for the ERTC even if they took the PPP. How's that for a bunch of initials? All right. Myth 2. The only way to qualify is if you had a decline in revenue. And this is no longer true either. In the beginning, before the changes, this was the case, but now a business qualifies with either a decline in revenue, more specifics on that to come, or a full or partial shutdown, as explained as follows. Okay, so here's how it works. A partial shutdown could be supply chain interruption, limited capacity to work, inability to access vendors or work sites, etc. Keep in mind, partial shutdown events could still be affecting businesses today, even if the shutdowns happened in 2020, such as supply chain interruptions still creating a backlog, for example. Now, other qualifying factors would include full or partial shutdowns, interrupted operations, supply chain interruptions, inability to access equipment, limited capacity to operate, inability to work with your vendors, reduction in services or goods offered to your customers, decreasing cuts in your hours of operation, shifting hours to increase profits, etc. I know some of those are repeated, but now that you know what the ERTC is, now you need to know if you're eligible. And to figure that out, you got to ask yourself 2 questions to determine whether you can claim the employee retention credit. First, did you have a significant decline in gross receipts for 2020 or 2021 from the reference quarter in 2019? If so, was it 50% or more in 2020 or 20% or more in 2021? Or 2, did you have a full or partial suspension of services due to a governmental order related to the COVID-19 pandemic? Let's dig into each one a little bit more. First, comparing 2019 to both 2020 and 2021 by quarter, did you have at least a 50% reduction in gross receipts in 2020 for any quarter? And or did you have at least a 20% reduction in gross receipts in 2021, again, compared to the same quarter in 2019 for any quarter? If the answer to one or both of these questions is yes, then you're an eligible employer. If not, then the other option is you must have a governmental order related to your services. That could be state, local, or federal governmental order. And it must have caused a full or partial suspension of services. Now, this can be a nuanced analysis, and there's very good guidance in Notice 2021-20 and 2021-23 provided by the IRS that gives you an indication for what the IRS is looking for when you're thinking through whether you've had a full or partial suspension of services. So you can just get your IRS handbook out and you'll be fine. No, that's our job, sorry. Just a joke. A partial suspension could be supply chain interruptions, interruption of business, limited capacity to work. Again, we talked about some of these: reduction in services of goods, inability to access equipment, inability to work with vendors, etc. So that's how to know if you qualify and are eligible. Now, if you are, here's how to figure out what your qualified wages are. The ERTC is calculated off of qualifying wages that you pay to your employees. First, note that if your organization received a Paycheck Protection loan and applied for loan forgiveness, payroll costs that you used in your PP loan forgiveness application can't be used as qualifying wages for the ERTC. The ERTC is a refundable payroll tax credit, up to $5,000 per employee for 2020 and up to $10,000 per employee per quarter, with a maximum of $28,000 per employee that can be claimed. Now, obviously, depending on your situation, that could add up to a lot of money that you're entitled to. And I'm sure you don't want to forfeit it or just let the government keep it. After all, it's your money. Now, at the beginning of this video, I told you that I'd give you some more free, customized help with getting your ERTC money. And that's where Tax Strategy Pro comes in. Let me explain. We have a fast, simple, free process we go through to not only make sure you're qualified, but also to maximize your credit and complete the forms necessary to get you a check in the mail from the IRS as quickly as possible. We've tried to keep things simple for the purposes of this video, but there are many other considerations and exemptions, including what constitutes qualified wages, how to calculate health expenses, what documentation the IRS requires for this very beneficial and wide-ranging refund. So to kick things off, we'll have a quick discovery call. On this call, we'll learn a little bit more about your business. We'll get some more information from you about your specific situation. Then you'll receive a field estimate showing the expected recovery amount if applicable. And don't worry, there's no risk to you at all because there's no charge if your business isn't eligible. Now, after that, you'll complete the required application and engagement paperwork, and we'll get you set up with one of our experts who'll determine which quarters to apply for. Then once we have all the info we need, we'll fill out all the paperwork, all the forms necessary, and send them to the IRS for you while you sit back and wait for the check to come. So if there's a See If I Qualify button on the page you're watching this video on, go ahead and click that to kick things off. If not, contact the person who sent this video to you to be guided through the process every step of the way and get the money you're entitled to.